Welcome back to my channel. So today's topic is external range liquidity and internal range liquidity. A shout out to SK, my coach. Now, the external range liquidity, we have above old highs and below old lows, and we have above or below relatively equal highs or low. I'm going to explain this very well in the best way I can for you to understand. And for the internal range liquidity, we have the order blocks, we have the fair value gap, and we have the liquidity void. Every time market takes out an external range liquidity, market is coming back to come and take internal range liquidity. Anytime liquidity is taken internally, market is coming back to come and take external range liquidity. They are like twins, vice versa, in the sense that I'm going to use a drawing to show you. Now we have the higher high, higher low, higher high, higher low, higher high. Am I correct? Now this is how markets move. So I'll say price moves. This is the low. This is the low here. And this is the high. Are you with me? Now, when they say market takes an old high, market has come and done what? It has taken an old high away. Liquidity was being taken out. Can you see that? Old highs, above old highs, liquidity is being taken out. And what happens next? Market comes for internal liquidity. Either it comes for a fair value gap. Sometimes you see a fair value gap here, or you see an order block here, or a liquidity void. So market has taken out external liquidity. That's when you will say buy side liquidity. So old highs, market has taken these old highs, and there's liquidity down here. Liquidity is down here, signaling what? Old lows. This is our liquidity. This is old lows. So anytime market comes and take this, a sell side liquidity has been taken out. But for this up section here, a buy side liquidity has been taken out. Now, I hope you understand this to this level. Just take it to the back of your mind like a rule. It has helped me a lot. The moment I see that market has taken out an external form of liquidity, which is our buy side liquidity, which is higher high, higher low. A higher high has been taken, which is here, old highs. Higher high has been taken out. We can see it took out the liquidity and it's coming back for internal liquidity. We all know what an order block is. I think I've done a video on the channel before, an order block, a fair value gap, and a liquidity void. So if you can know these two rules, I believe it can help you in analyzing the chart in a very simple way. The same thing goes for a sell scenario. Lower low, lower high, lower low, lower high, lower low. What happens? This is the high. These are liquidity. This is where money is relying, right? This is where liquidity is. There's money here, the old highs. But what happened? Markets came and what? It took the old lows. You can see that, right? Markets came and took the old lows, signaling a break of structure, and it came back. That is the external range liquidity that you are seeing here, and it came back and took internal range liquidities, the order block, fair value gaps, and liquidity void. Now, if you come on your chart here, it's a very simple scenario. If you look inside this chart here, market did what? There was a shift in market structure here, signaling a break of structure. Higher high, higher low. Market took the old highs out, right? Now, based on our rule, don't forget the rules. It guides me a lot. Based on the rule, market has taken external liquidity. So I'm going to be looking for internal liquidity. I'll come here now. Am I seeing liquidity void? No. Am I seeing a fair value gap? No. But what can I find? I can find an order block. Can you see that? And what happened? Market reacted there, and what is coming down, because what? Market took out this liquidity under here, which is what? Market took out what? The sell side liquidity, which is an old low. And as market has taken out the sell side liquidity, which market did not respect this area, but market shifted structure, a sell side liquidity has been taken out. That market is coming back for an internal liquidity. We don't have a fair value gap, we don't have a liquidity void, but we do have an order block. You can see that here, right? Now, if you go around your chart, You will see here also a sell side liquidity has been taken out here. An old low has been taken out. You can see that, right? What happened? We look at the whole scenario. What are we looking for? We're coming back for internal liquidity. Our rule: internal liquidity, order blocks, fair value gaps, liquidity void. Going back to the rule, we have the old order blocks, fair value gaps, and liquidity void. Now we're going to go back there. We're just applying the rules. Do we have an order block? Yes, we do have an order block. Don't forget, market has taken out external liquidity down here, right? We're coming back for internal liquidity. Don't forget your fair value, your Fibonacci from the high to the low. This is a very nice guide that has helped me trading a lot. Now, what do I have next? I have what? I have my fair value gap. You can see it, right? Do we have liquidity void? No. So these are the point of interest. External liquidity has been taken out. You can use it to trade. It will really help you a lot if you're having difficulties understanding all this liquidity, inducement. This is very straightforward. You can see that it came in here, took in the fair value gap, and market reacted down here. Let me go around and show you amazing scenarios here. Okay, now what am I seeing here? I'm seeing what? I'm seeing a shift in market structure here. This is the last swing point that was here, right? Market took out the sell side liquidity, also an old low. Are you with me? Now, as an old low has been taken out, what do we have here? Is there a fair value gap? No. In liquidity void? No. But what do we have? We have an order block here. And what can we see? Market got in there and what? Reacted underneath. Those are the three things we should be looking for. You should be conscious of every time you're on your charts. Now, if you look inside here also, there was what? I can take this swing point and I can take this swing point here. Try and study and learn swing points. It will change your trading entirely. But my coach would tell me I should start from here, the closest swing point, so it will be this one. So market took an old high. We've been using old lows before. Market took an old highs from here, right? So what am I looking for? I'll take my Fibonacci from the low, the latest swing point here, from the low to the high. Then I come to my rules again: order block, fair value gap, and liquidity void. In the discount, is there liquidity void? No. Is there a fair value gap? No. But what do I have here? I have an order block, which is the last candle with the longest swing point here. Or I can use this candle here as an order block here, as the closest point of it here, since market shifted structure here in the swing point. Or you can use here also as a shifting structure, also on the swing point, and here as an inducement. But what are you seeing here? Market reacted there. So if you're having difficulty, you don't understand people saying inducement or whatever story they're actually saying, this can guide you on how to use the chart very well. What happened here? Higher high, higher low, higher high, higher low. A low was taken out from here. Old lows. Are you with me? Now sell side liquidity was taken out of here. If I use my Fibonacci from the high to the low, from the high to the low, the rule again: is there a fair value gap? No. Is there a liquidity void? No. Is there an order block? Yes. And what happened? Market came in and what? Reacted there. It's just rules. Just learn the rules and your trading will change entirely. Your trading will change entirely. The same thing here, but I don't like that chart. It's not looking sweet in my eyes. Let me show you one again. It's just rules. Market did what? Took out what? The lowest swing point here. Took out what? Sell side liquidity. That's the swing point was being broken. If I use my Fibonacci from the high to the low, from the high to the low, is there another block here? Is there a fair value gap here? Yes. Other block, liquidity void? No. But if you can look at it here from the other block, or I will say the fair value gap also, in that area there was a form of reaction. So market took out external form of liquidity and market came in for internal liquidity before it did this. It took people in as an inducement. Okay. The same thing here also, no fair value gap, but it came for this long candle as an order block. Okay, you can see here also market took what? Market took the swing high, lower low, lower high, lower low, lower high. Market took the buy side liquidity. If you use your high to the swing point from high to the low, is there a fair value gap? I won't really call it a fair value gap, but yes, but we have what? We have an order block and not liquidity void. So if you can try your best and master these rules that are on the chart, where is it again? Master all these rules. Just use this as a guide. If market takes out external range liquidity, market is coming back for internal range liquidity. If market takes out internal range liquidity, market always come back to take external range liquidity. So I hope this video was helpful for you. Please don't forget to subscribe on the channel, ask your questions, share the videos to friends or people that you know that are struggling in trading, and I hope this video is impactful in your trading. Thank you so much.